So, like, let's up here this Pluto here. Okay, so coming into this week, I was looking at this range over here. After we flushed down here into this fair value gap that was here, I was already thinking, okay, we're gonna probably bounce off this because of the fact that we're not entirely bearish. We were just rebalancing all this move down here. And when price hit this and started respecting with this candle, I was like, okay, more than likely we're gonna turn bullish. And I just have to wait a few more days. Traded some of these days, of course, and I took a few losses on here that day, right? I took a win here and I lost on that day because I was thinking we're gonna probably keep going higher, but that wasn't the case. And then I saw that we created a fair value gap here. Now let me close some of these things so you can see. So this candle one, two, candle three. We have a gap here. This is a volume imbalance right here. You count that as a volume imbalance, which is also another PDRA, but it's a very weak PDRA. But since it's on the daily chart, it's still a huge magnet on the because when you scale down to the lower time frame, it should also it'll act as a magnet too, but it's like the weaker magnet compared to like an actual fair value gap and like highs or lows. So this will be like the weaker one, but because it's inside of actual fair value gap too, it's with it, it makes it even stronger, like a stronger draw on liquidity. This was FOMC rates that was yesterday. I was in a trade for this one, but I got stopped break even, so I was like, okay, since it was already like almost closed, I just didn't even like worry about it no more. And so coming in today, and for today, Thursday, I was like, okay, since we're coming out of this gap, it's gonna be a bullish day, and also the weekly was already also flipping too, and the monthly was also flipping. So I was like, okay, we're probably gonna go for the daily high, which we already took that daily high, and then those gaps in here. I'm gonna go to my other chart so I can show you the trades that I took on here. I took that same similar trade on my top server account, but I'm not gonna get into that right now. Where is it at? I entered off here. Soon as we started trading out of here, like this is the daily gap right here. I'm gonna show you. See, this was it right here with the volume imbalance in it and all. I think if you have on set, it looks a little different, I think. But turn that off. Turn it on, it's like down here, but you turn it off, it's weak. But yeah. So once we started trading out of this, because I was bullish for these daily highs right here, I was like, okay, so don't mind the background noise. Where's it at the hourly? Yes, on the hourly around 7 p.m. I seen this gap form here, and I was just like, okay, there's a good chance we're not gonna come back to this. So the next gap it makes, more than likely, if it made this one and it didn't trade back into it, and it made another one, it didn't trade back into it. But learning from ICT, it's like if there's two fair value gap, always like make room for the second one. There's always a chance it might go for the second. However, there was three of them here, so I was like, okay, there's a good chance we go for that one, and then it'll trade out of it after that. So if there's three of them, the one in the middle is going to be the one that goes for. If there's three gaps, goes one, two, three. So it went for that one and it started trading out of it. And then price was being respected. We made a smaller one right here. Price came back. Tap. See, you gotta zoom in so you could see. See that right here? And another one right here. Let me change the color to here so you guys can see what I mean. Made another one right here. See, traded into it and then it ran away. That's on the hourly time frame, by the way. So, and if you scale to the 15, if you want to get like a more precise entry, you know, you can just, you have to wait a little longer, or you have to like buy inversions. If you find the inversions, you would just buy the inversions. And we had one right here. You could enter here, the stop loss below the low and just leave it alone. There was multiple opportunities to go long. We had one right here around 6 in the morning, going 7, 8 a.m. Once this got inverted, that's another trade right here. Could have took that. There was like pretty much a lot of opportunities. And if you even scale to like the 5 minute, there was even more opportunities where you could have like scalp for quick trades. You see like all through here. All through here, you could have scalped this, scalped this. This was a great scalp right here. And we had a smoke right here. Because if you're looking at this, you enter through here, you're getting 136 points. That's a lot. So we even have some right here. This is like the last line of defense of like a setup you could have taken right here. And how many points is this? If you're entering here, you still got what? You should have got another 100 points. So we're going in with a bullish bias though. But since I trade like the more higher time from like the 15 and the hourly, I aim for those time frame because like it's cleaner. Because I'm mainly looking for where the daily range is going to go. So I really don't be on anything lower than that. But we made these hourly gaps, we traded into them, and our price is running high. This was my original draw. Taking a bunch. I already took a few partials out from like when price started trading toward this old. I think this was a London high. I think this was no 5. This for yeah. This was a London high. I think right here. I think some partials around here, here. I'm gonna show you execution marks. See, as we're moving, it's taking partials. And then 32. So the last idea I had was okay, we could probably go for this high. That's the next draw on liquidity. And we also have this old gap right here that I'm also looking at. That's also another draw on liquidity because we're still bullish. So I was thinking like, okay, this is a very huge gap. It's on the 4 hour too. What up? Oh, it is. But this is gonna be inversed with the 2 p.m. candle. It's gonna push higher, and then so I expect this to push higher and close, and then inverts this, and then we'll continue even higher to make the new all-time highs. And this was also an inversion I was looking at for price to hit. This is a bullish inversion. The B stand for bullish, so bullish inversion. That was right here. I was looking at. So once this candle did that, I was like, okay, more than likely we could retest it and then continue higher, and that's what we did. So now I'm watching this range right here, moving the stops right above this high. I want to get to 1,006. There we go, 1,006. 1,006. And as you can see, this is the demo account that I was working on. I'm just like using the higher time frame ideas to place the trades on these accounts. And that's like data I'm collecting pretty much. Just collecting data. This was a crazy trade. That was a bad trade I took. But yeah, just collecting data. So that's the best way to like trust like the setups. I'm gonna take another partial in here. I'm gonna take off 3. I'm gonna sell 3 because I don't know if price really gonna go the way it's moving. If it's 2 o'clock right now, we have 3 and 4, so I'm gonna let the 2 run for 3 o'clock and 4 o'clock because from the let's see, I use the body for accuracy. So from the manipulation, we already went way above where we were supposed to go. So let's use this one also. Let's try this. You want to use the bar. No, we're gonna use a wick for this one actually. Low to high of this, going based off this fair value gap. We're at the 1.5, so more than likely we could possibly hit the 2.5 going into market close. So that will be I'll put that as my target. Hit the 2.5. So, and I will my stop up a little bit more because I don't think this candle is gonna go that far. I don't think we're gonna take out this low. It should stay intact and price should reverse and push higher. And if I get stopped out, that's fine. Because this is just a runner I'm leaving. Because I want this to get inversed. So let's check what the ES is doing. He has been moving very slow. We did try to inverse this gap right here. So I'm watching this closely to see if ES could invert. Because if ES inverse this gap here, that would mean and Q should inverse this one right here too, which would be this would act as a springboard to send price even higher. And all I would need to do is like, well, we move what? We move 600 points today, so I would just have to sit on the 15-minute during Asia session and wait for a new 15-minute fair value gap to form around 8 p.m. A bullish one to form, and I'll take the long to target this next fair value gap up here, because that'll be the continuation for Asia. Because we had a reversal Wednesday, reversal Thursday, continuation, and then Friday is gonna give us the last bit of push for all-time highs again, because that's the next strong liquidity right here. This is no all-time highs, and that's another, how many points is that? That's another 200 something point rally. So more than likely for all-time highs, we could see like maybe I'm always gonna give them at least 300 points. So over at least 300-point run for the next day. So far, it can be moving. We're already ranged 452, over 452 points already moved. And we have, what, 2, 3, 4. Yeah, we have like 3, 4, 5. So we got 3 hours left. So, but I'm still going to keep this all the way up here to see how far we go. But overall, I'm still very bullish. And going into next week, let's remove this because we already took the high. Let me also go on regular trading hours because there's untapped regular trading session highs that I like to look at. So we have a lot of buy side liquidity up here. So New York PM high, New York AM, see, New York PM, New York AM, all these highs, important drawing liquidity for like session. So we have all these highs available, and then that's pretty it so far. There's a lot of liquidity up here, which tells me going into tomorrow, we could very well see higher prices. Because these highs are very important too. The ones that are on like the session highs, the lows, those are very important. Even though you might not see them, but yeah, like this low right here, this low right here, this low right here, all that would be revisited when price is reversing. They'll act as a magnet for the strong liquidity. You see, it's taken. This was taken. I did say this model right here. I did say like if we already trade above this by 9:30, we could go on regular trading hours to see what's going on. Guess what? PMI is here. We opened, we ran directly, we took out this high, and we just placed back down. But since we were bullish, we would expect the inversion to come out of nowhere to just send price even higher. So we know this was a fake out. And then we came back down. And on a bullish day, we know that it's probably not going to take the lows of London. Since we opened up and pushed higher, they just couldn't do it. And then once you see that inversion right here, look at the setup for the day. See? Boom, right there. Price tags this, and that's a long. And if we were on it, that was literally 135 points. I mean, come on. You do the math. One mini. Saying just one mini, bro. Just one mini. Take out for this high right here. Come on. That's not enough for the day. Think about it. Just one mini alone. And if you're more conservative, 5 micros, right? Did 5 micros and you target the midpoint of the gap. Come on. And that's a good day to me. So, and then you still have other, and if you miss this whole area and you could still take an opportunity right here as to go toward PM. Or you trade it on but when you aim for the much higher time frame, like the hourly and the 15, you're not gonna get that many setups. But once you find the one setup, you just take it and just hold. That's that on the for the 15-minute time frame. So see, there was one right here. If you know they were gonna like since there's gonna be a bullish day, if you were trading Asia, when this tag here, buy, stop below the low, just hold. Literally just hold. All for these highs right here. Knowing that it's gonna come back and close out all this high. From a daily, from especially coming out of like a daily fair value gap, it will clear out all these, like everything will be cleared out. Because the daily gap is very, very strong. And on top of that, if you go one time frame up, hourly fair value gap will clear everything out. You just gotta size down and just hold your position for like the nearest highs, and then that's about it. And if you entered, here or anywhere here, you would have caught what? And you target this high right here, which is a London's high. That's 249, 250 points. And if you held like I did, that's over 400 points already, pretty much. It's like, but the thing is, the higher time frame that you go, the less setups you're gonna get. That's why the best time frame to find like one or two good setups will be the 5 or the 15, and maybe the hourly. So like you want to skim through all three of these. The 5 is more like scalping to get that quick little trade in, but the 15 is like the day trading time frame. Because sometimes if you can find a setup on the 15, you could probably see it on the 5 first, and then you take that on 5. But the best time frame is always gonna be the 15 minutes when it comes to looking for the best day trading setups. The 15 always. Anything lower than that is like you're scalping. And if you go to like 1 minute, like if you were to look at this setup on a 1 minute that I took, you see, if you were to look at it on a 1 minute perspective, right? Let's really, really look at it. I entered here. You see, and I've been holding through this entire thing. All this fluctuation in price. Like, if you're trading on a 1 minute time frame, if you can't handle this, it's like, you know, and you could go to 2 minutes. It's like, holy, you know? And then people see you do it, stuff like that. They'll ask you like, how do you do this? But in reality, you're just using, it's the same thing on every time frame. You don't have to be on the smaller time frame if you don't. If it's too fast for you, you can use the small time frames to trade session liquidity, like the 1 minute time frame really. You could use that to trade session liquidity models, which is very good too. It's very quick. Like I'm talking like very, very quick. Very, very, very quick scalps. Because if you look at here, you could have been looking at this like, okay, we're above midnight. Market's also above 8:30. When market open, you could see that as soon as market open at 9:30, it was like try to trade up, start rejecting. We inverse this. That's a short right here. The target this. or you could target, back to back to midnight. But somewhat of you, if you try to target on the low, knowing the fact that it's a bullish, it's a bullish day, you might not want to do this. You probably would have to fade this, but you could still trade this on the way down too. So what you would probably have to do, since we took the high and it failed to take the low, and we inverse this right here, immediately the moment you see this inversion happen right here, or even right here, like when price came back up, came back down, and it runs back up and versus this, the first thing on your mind should have been, okay, longs. You just gotta find a small entry point. But in a choppy market like this, it's very like sometimes it's very difficult to navigate this. But you have to wait a little bit. You know, if you took along here, depending on where your stop is, even if it's here, you probably would have got stopped out. Here, you probably would have got stopped out. I know a few people probably got stopped out trying to trade this thing. But on certain days, the session liquidity works very, very well. But I'm not really a big fan of it. I rather do it on a 5 minute because it's much cleaner. Because like, look, 5 minute gap here, entry long. Like, it's very clean. Inverse. So as you see the inversion, your eyes is already looking for other fair value gaps. Like that's the first thing you need to be looking for. Fair value gaps. Where are the fair value gaps? Where that's the main PD arrays, like that's very like strong. Like where they at? Is it bullish day? Inverse fair value gap, you should already know, okay, I'm looking for bullish ones that price may target and then run. And on a bullish day, when the market's prone to go higher on a bullish day, you want to use your bigger leverage there. Always like increase your leverage when the market is like going to make a big move, and and you're very convinced that it's gonna like move a lot. That's how you make a lot more money with these firms. Like if you know that it's not gonna be it's not gonna be a good trading day, and the market's not in sync, meaning like the weekly and the daily is not the same color. Like for example, like the weekly might be red and then the daily is green. If they're not in sync, you don't want to, you want to be careful pretty much. And the day of the week also matters too, to look for really explosive moves. But once you find explosive setups, like you can really make a lot of money. And the best way to find them will be like on the 15-minute time frame and then the 1 hour. You will find out like the most. It's because it's the same thing. You see, 1 hour gap off the daily. This is a wick. All of this right here, this is a wick on the daily time frame. So when you look at this, you see it comes back down and tags this. Yo, come on, that's a buy. This is like it's tipping its hand at you like buy, 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 buy. Just buy it. You know what I'm saying? You set your stop loss and then, like on my other account, like I was just spamming that buy button on that shit and then I bought. And I just had to held. Especially knowing that it's gonna be a bullish day. So I don't want to hold you guys for too long, but that's enough for today. We're already 23 minutes in the video. But yeah, I'll probably make another video tomorrow, or wait, no, actually no, I'm not gonna be here tomorrow. So maybe next week I'll do some analysis videos on what I think, because I'm still bullish going into the next week and next month. So because we got a lot of highs that needs to be taken out. But but I'm definitely going to trade the Asian session because of the fact that we're trading out of a daily bullish gap. So the next daily candle is probably going to want to start moving to take out these highs really fast because they're not that far. They're right here too. So, but that's it for today. Thank you for listening. Thank you for watching.